The big thing that's going on really in the Bitcoin crypto space is, let's call it the Great Unwind. Maybe I just made that up. I don't know if I've heard that before. The Great Unwind, but that's exactly what's happening. The leverage, and that's the key word, leverage that's been built up in the system is now deleveraging. Went from leverage to deleverage. Now, leverage is a tool. I like to say that leverage is like leverage is like fire. So leverage like fire. Fire could be used to warm my house in the winter. That could save my life. Or it could burn my whole house down. And that's sort of like what we're seeing. So we could call it a double-edged sword. It can cut my enemy. It can cut me. I have to be careful with it. And so that's what leverage is. Now, leverage helps us to grow faster. That's the positive benefits of leverage, and then it tears us down faster. So a couple examples of this would be, let's say that my business is booming because the Fed printed a bunch of money and I have way more customers than I ever had before. More people want to fill in the blank, whatever kind of business. Let's say I'm a home service-based business. So people want to remodel their homes. They want to buy new mini blinds, put jacuzzis in, remodel their bathrooms, whatever, fill in the blank, X, Y, Z. And so, shoot, man, I'm booked out. I can't get to appointments fast enough. I hire new people. I have to buy new trucks. I get a couple new trucks to get the new people in. They're going out there. I got to buy new equipment to get these things built and serviced and installed. Business is booming. It's never been better. And in order to grow faster, to keep up with that demand, I would use leverage. The leverage would be credit. So now I'm borrowing money. I'm using credit lines. I'm using leverage to buy those trucks, to buy that equipment. And of course, it's great because all this new business is making up way more than what those payments are on those trucks or that new office or that equipment that I had to buy. So, I bought a new machine. It's $100,000. My payment's whatever, $500 a month, but it's making me $5,000 a month. So it's like, heck, I'll pay $500 a month in debt to get the $5,000 a month it's making me. That's great. And so that leverage, that debt allows me to grow really fast and keep up with that. But the problem is when the market shuts off and my phone's not ringing and I'm not getting new customers and that machine's not running, how do I afford to pay for all that debt? And just as fast as it built up, it gets wiped out. All the debt just evaporates and clears out. And that's exactly what's happening in all the markets, in the stock markets, in the housing markets, but it's specifically been really, really painful in the cryptocurrency markets. We've been talking about this for several weeks now. And really, we went super deep when we saw Terra Luna melt down. Terra Luna was supposed to be a stable coin. I'm not going to go super deep into this. I've already broken this down. You can go check out Mark Moss podcast, Mark Moss iHeart, Mark Moss podcast, and you can find all my back issues. So dig back a couple weeks, just go through, you'll see where I talked about Terra Luna. I broke down the mechanism, how it worked, how they used leverage to build it up, how it was like a Ponzi, and how it unwinds. But the problem is, as Terra Luna unwound, which was about a $60 billion valuation at the time. Now, to put that into perspective, you remember the Great Financial Crash, 2008, the Great Financial Crash, when the entire global banking system was basically crashing at the same time? Well, if you remember that, there was a spark that really led to that. Of course, that was Lehman Brothers. Lehman Brothers went bankrupt. And Lehman Brothers was worth about $60 billion at the time. So we're talking about the same magnitude. And what happened when Lehman Brothers went down, all the other banks that were caught up with that, had loaned money there, were also caught up, and then they started coming down because of the leverage. And that's the collateral. So they loaned money. They had it on their books as an asset. When that money got written off, then that collateral was no good. So they got margin calls. So they had to post more collateral. That went down, and it triggers a domino effect. And that's exactly what happened with Terra Luna. And so we've been covering this each week, right? So then we saw Terra Luna go down, and then it was like Celsius is going down, and then we talked about like Three Arrows Capital starts going down, and it's the Great Unwind. That's what we're dealing with, and it's all because of leverage. Now, we're still processing through this, but this is probably, obviously a lot of this, the Great Unwind was kicked off, was ignited because the Fed is trying to do a Great Unwind. So the Fed, the Federal Reserve of the United States, is the greatest, they're the producer of the leverage, right? That's where it comes from. They print money. They print trillions of dollars and put it into the system, which causes the housing market to boom, for example. And then they drop interest rates to zero, so you go borrow a bunch of money. You use a bunch of leverage. That's what creates the booms. They print the money. They lower the interest rates. You go use that leverage they've provided to you. But then they decide when to suck it right back out. They decide when to shut the music off. So then they stop putting money into the economy, and then they raise the rates on you. And so that's what started this great unwind. That started, was it November of last year? The Fed said they were going to start raising rates. They're going to start letting assets roll off their books. They weren't going to pump money out through quantitative easing anymore. And so since then, we've seen the cryptocurrency markets really start to unwind. Now, the cryptocurrency markets seem to lead the rest of the financial markets. So I think that Bitcoin specifically and crypto overall really is kind of this canary in the coal mine where it unwound way faster. So Bitcoin started rolling over really quick. It started selling off. Much before the traditional financial markets did. So the Fed kicked it off, but then as the Bitcoin and cryptocurrency markets started falling, then that's when the Terra Luna got into trouble. It worked really well when Bitcoin was going up in value, but when Bitcoin went down in value, Terra Luna got into trouble. When Terra Luna got into trouble, then Celsius got into trouble, etc. So here we are dealing with this, and it's been a massive drag on the Bitcoin and cryptocurrency space because it's basically causing massive liquidations, meaning they're being forced to sell huge amounts or pretty much everything they have, huge amounts of Bitcoin and Ethereum, et cetera, onto the markets at the right time, at the exact same time. So supply and demand. If you have more Bitcoin being sold or more crypto being sold than there are buyers for it, the price will come down. And so right now, with the markets, all the markets crashing, the entire, from real estate to stock markets to you name it, down. Crypto, of course, is way down. But then you have to dump all of this on the market. There's not people to buy it. So what happens to the price? Of course, it comes down. Pretty easy to understand. So I think it's been, like I said, the canary in the coal mine. I think it happened first. And I would think we'd be maybe at about the bottom about now. But, man, the hits just keep on coming.